Good evening. This is Rhonda coming to you again with another trading idea. This I'm going to show you how to catch some pips, and it's very simple. And this is also something that can work for expirations as well. So we all know that support and resistance, what was once support becomes resistance. I spoke about that in a previous video. So I'm going to show you in this one what that looks like. So here you have an area of support, right? So, excuse me, I'm so sorry. This was one area of support right here, turned resistance on this side. These wicks right here, I put a line at the tip of this wick, and you will clearly see that this is an area of support, and then it becomes resistance. But more accurately, well, what I would like to do is put this line right here. Okay, so this is support, and then this is resistance. And the reason why I chose this one is because you can see where price, let me get this out of the way. You can see where price was coming down, okay? It touched and bounced off of this and went back up, and then came and broke through and then went down. But actually, let me see what happens when I put this is here. Okay, this is an area of support as well. So what I did is just put the line right here at the tip of this wick. Excuse me, I'm so sorry. At the tip of this wick. So clearly you see support. And once support is broken and closed below, it becomes resistance, where it came back and it tested. It always will come back and test. If it's going to continue down, it's just going to test with a wick. But what you want, if it's down, if it's trending down, you want the red wick, not the green. You want the red wick. So price broke, closed, came back up and retested, and then when you got the rejection of the red candle, you enter in the trade on the rejection of the red candle. Then you'll catch it from this point all the way down to this point. And you got 156 pips within 2 days. Okay, simple enough. You don't want to, well, a lot of people scalp. And the way that they scalp is they get in and then they get out when they're satisfied with the profits that they've made. And also, if you'd stayed in, you would have lost all of your profits, but then you would have also, if you stayed in, you would have gotten them back because price would have come back down this way. But why lose any when you can take the profits from here to here, get out, it goes back up, then you want to get back in, take your profits from here to here again, get out, it goes back up, take the profits again from here to here. Again, you can hold it and come back down. But the reason why I say this is because what I have noticed that the market does is it does things in threes. It loves the number 3. It doesn't do every single thing in threes, but it loves the number 3. So here you got 1 touch, 2 touch, 3 touch before it actually continued going down further and creating lower lows. At the point that this lower low was created, came back up and retested, that you know was going to continue down. See, right here, you didn't know that it was going to continue down because it had not broken this previous low right here. And with a downtrend, you want higher highs and lower lows. So right here, you have a higher low and then a lower low. Yes. So when it created this lower low and it came back and did the retest, this lower low than this low would have satisfied the thought, or could have satisfied the thought or the idea that you can get into your trade right here and take it down. But I'm going to tell you how I would have gotten into this trade. Okay, so remember when I was saying that the market seemingly likes to do things in threes at times. Okay, so just as you got this 1 touch, 2 touch, 3 touch, right here, you got 1, 2, and 3, and then it came down in this last candle right here. So with this support and resistance line right here, as soon as you got that 1, 2, and that third touch, I would have gotten in the trade right here, and I would have put a sell limit with my stop loss above this wick high right here. So probably like right here, I'll put my stop loss, or right here at the high of this candle. But anywhere above this green wick, I would have made my stop loss, even if it was just a hair above the green wick. But I would have set me a sell limit so that when price came back and touched this line, or maybe right here, when price came back and touched this line, you get into the trade for, let me see how many pips that would have been for that day. That's 193 pips in one day. Yep, 193 pips. And I wouldn't be afraid to take this trade on a daily, because I probably would not have made 193 pips for the day, because I'm a scalper. I probably would have gotten in and been satisfied with like 15, 20 pips and gotten out. And if I'd saw where, you go down to your lower time frames, you'll see where you can get back into the trade, because as you see here, price comes up, goes back down, comes up, goes back down, comes up, goes back down, up and down. So there will be multiple opportunities throughout the day to catch 10 to 15 to 20 pips. So, okay, so you got 1, 2, and that third touch is in this candle right here, and boom, the next candle is a sell. Okay, so even right here, look, watch this. I'm going to put my line right here. Put here, then no. Okay, even right there, you got 1, 2, came back up, 3, boom. We're in a downtrend, so you're only looking for sells. The trend is your friend is one of the oldest sayings in the world of trading. The trend is your friend. So if you're down, you're only looking for sells. And the reason why you would look for a sell here is because you got another lower low. You got this high, this low right here that created a lower low, yet then created another lower low. So we got 1, 2, and 3, and then price decided to break down. Now let's see what price does after this point, because, okay, 1 touch, 2 touch, and 3 touch. Let me get a trend line and show you this. Okay, so we got 1, 2, 3, and then price broke and closed below for the possible trend continuation right here. So I'm going to clone this line. Let me see. If I put this line right here, this says that trade, there's a possibility that trade could come back up to this. Well, no, 1, 2, 3, and then a break below. So we'll see. Let me push the replay button. Well, before I push the replay button, you see how this went up? What you see here, 1 touch, 2 touch, 3 touch, and a bounce to the upside. This next candle after the 3rd touch went up because this is support. This is resistance. This is support. This is, I really want to say guaranteed, but I can't say that for the lack of, I don't want nobody to, I don't want nobody coming after me. But look, here you got 1. Okay, let me get a horizontal line right here. And I'm going to put it at the low end of this one. But definitely you got 1, 2, 3 touches. We're on a downtrend. The next candle was a sell. Okay, it was a sell. So price has to touch the line. Okay, it has to touch the line. So if I were to grab me a trend line right here, to go down this way, price hit 1, 2, wait a minute, 1, 2, and then a 3rd time, and then it went down. See that? 1, 2, 3. This is the first one, this green candle right here. This is the second one, this red candle right here. And the 3rd was this green candle right here. And then it went down for the next 2 days. It went down for the next 2 days. Almost guaranteed, guys. Almost. I'm so glad I can say almost. Even with this one. Okay, so let me get a line, let me get this off of here. I'm going to put my line right here at the tip of this red candle. So you got 1 in the red, 2 in the green, and 3 in this green. The next candle was a buy. Yep, it was a buy. You have it here yet again. Support. Let me push this line up here. Well, I can't. Okay. So this candle, this red candle, stopped at this line, opened and went up right there, came back and touched this line, bounced off of it. The next candle was a buy. It was buy. So let's see if this really works. And when I say buy sometimes, okay, we're selling. We got 3 wicks on the bottom. 1, 2, and 3. And there was a sell. It's a green candle, but if you'd have sold it stating that price would remain below this line, you would have won that trade. Okay, so no fear, guys. No fear at all. Here's another one right here. You just have to be confident. Okay, so this doesn't have, okay, there are 3. Okay, I see 3. Okay, so you got this green candle. Well, okay, so you got this. Okay, you see this little itty bitty piece of a wick right there? Put your line right at that big. Let me move it out so maybe you can see it. This little piece of a wick right here. Put your line right there at that wick. So you got 1, 2, 3. The next candle was a buy. I am so not making any of this up. This is price action that was here long before. This is what, back in 2014, November of 2014. So why wouldn't I use this? I wouldn't use this because you only have 1 and then 2. The rest price is already above this line right here. And so you only have 2. So if you use this 1, 2 and thinking that this candle right here touched, well, it did go to a sell. But no guessing games. Okay, no guessing. Okay. But right here, just above that, we got 1, 2, 3, and price remained below this line right here. Before it went up and closed above it, but it remained below this line. So what would you have done? You would have taken this line up to the tip of the lowest wick of the third candle. So you got 1, 2, and 3. Price remained well below it. So it would have been a sell. You would have placed a sell stating that price would remain below this point right here. And this is also where you would have placed a buy. So this would have been like you'd have been able to trade for the sell and the buy at the same time. And there are times where price will stay in between 2 strikes on Nadex. There are many times where price will stay between 2 strikes on Nadex. So here, I would not use this wick. I would use these 2 right here. These 2. Now you can use these 3 because price did remain below. But I would use this wick right here, this wick, and then this third wick. Well, look here. Okay, I'm glad I see this. And you'd have to use your judgment for this. Price there are 3 wicks consecutively. 1 here, 1 here, and 1 here. And to place a trade that price would stay below a certain point, price actually came and closed above this resistance area. And this is definitely resistance. This was support and this is resistance. But in this candle, it was a buy. But look at what price is temporarily doing. It's pulling back to the side and did what people call, what I hear them say is a fake out, where price actually comes and closes or breaks out of a certain area and then closes above that area before it comes back and goes back inside the area and closes below. So to be on the safe side, that is why I would have used these 3, 1, 2, and 3, which is what I stated earlier, and then the sell. The sell, because it's at the tip of the trend. If before this candle, these candles actually were there. All you had was this. So what I like to do, which is what I've stated in my previous videos, is go for the tip of the sell candle in support and resistance. That would have made this statement true. For price to remain below this point. So look at it. 1 touch, 2 touch, 3 touch, and the next one was definitely a sell. It was definitely a sell. Because here, price is going down. Here, price is going up. So, it would have been kind of risky to state that price would have remained below these 3 right here. But you want to use your judgment and your understanding of what price does. Price is selling down, you take sells. Price is going up, you want to take buys. You want to take buys. Even though here you did have that option for a buy because it's right at the tip of this sell candle, price stayed below. Because we are in the seller's market, it was a buy, but it was also a sell. It stayed below this area. In the buyer's area, you want to put that line at the tip of your red wick. For price to remain below. If you had gone with the green, price crossed above. See how that works? So I'm going to do some more. Just going to get into the playback. Okay, see what we get. Okay, so I'm going to put a line here. But we are in a pullback. So if we're in a seller's market, I would take it up here. But let's see what happens when we take it down here. Bam. 1, 2, 3, sell. See that? 1, 2, 3, sell. The third wick. 1, 2, and at the red wick is below the red wick, and the green wick is just a tad bit below this red wick. So that's what made it safe to take the sell. Okay. It did not work on this end because we're in a seller's market. Remember, we're in a seller's market. Here, you see how price went and closed below this line? Price closed above this line because it was buying up. Okay, just by the same token, here you got 1, 2, and 3 wicks right here. Price did what? It closed and went up and closed above it. Why? Because price was going up. Right here, it was pulling up to the upside. Okay, so this was the previous resistance. This is the resistance that let me see. I would have lost this because I would have taken this trade, stating that price would remain below this wick right here. I would have lost that. No lie. But when price did this right here at this wick, and this candle is, you got one touch right here, another touch with that red. I put the line at the red wick. When this green candle came and closed below this line, the next candle was a sell. 1, 2, and 3 touches was a sell. But that's because we're going down. This right here was going up. it's going up. And so I would have had a brain fart and forgotten that we were going up. No matter whether I put it right here or not, we're still going up, meaning the chance for price to close above this line is great. The chance for price to close above this line right here was great. The chance for price to close above this line, no matter what, was greater. Because we had started establishing higher lows. There's a higher low, then this low, higher than this low, higher than this low, and higher highs. This is the first high, higher high, okay, then this high, higher high than this high. So when you got higher highs and higher lows, you got an uptrend. Higher highs and higher lows, you're going up. But we're yet in a seller's market. So we broke from here. Where's my line? At this point, the next candle was a sell. Down here was a sell. Okay? Because you got 1, 2, and 3 touches with the 3 pin bars. That next candle was a sell. Okay? In a downtrending market. So in this next video, I'm going to show you what it looks like to buy using the 3 touches, the 3-touch method. I guess I'll call it the 3-touch method. So don't forget to like and subscribe. Subscribe because I am going to continue coming back with these trading videos. And I like to trade in a way that you just don't see you just don't see it on anywhere as to how to trade. I mean, maybe people are doing it and you have to pay them an arm and a leg to learn how to do this. But for me, I'm self-taught, except for one person, and that was Mark Fuller with Team Alliance. I loved his video, and I give thanks to that time period that I was training under him, because I learned from watching his videos. I learned from him to take my time and be patient and wait. And learning to wait, I started seeing all of these different patterns of behavior in the market. I learned a lot about trading binary options and trading for pips by just simply waiting and waiting for price to come, waiting for the time for me to trade to literally come to me rather than chasing after it. So in the next video, as I stated, we will start on the buy side of trading. See, if you would have bought here, you would have lost that trade. You got the 3 touches, but we're in a seller's market. Stay tuned for more.